Hi, this is Zak Mir with the Share Talk Bulletin Board Heroes on Friday, the 1st of June. Starting off with Altona Energy, where it looks as though there's some positive excitement here on the technical front. We had a dead cross there in March, which didn't really take the shares down too much lower between the 50-day and 200-day moving averages. But the excitement now is the way that both the 200-day line, that's at 0.39, and the 50-day line are both rising, and the shares pushing through the 200-day line for a weekly close above that feature. Gives us the potential for a top of 2017 price channel target around 0.8 to 0.85. That was obviously retest the late 2017 resistance as well. And the time frame on that, the next 1 to 2 months. Stop loss in at this stage, really anything back below the 50-day average at 0.32. Only really bearish if we get back below 0.3 again, but I would be very surprised if that happened now. On to an old favorite, which maybe not such a favorite now, but Ascent Resources, the gap down through the 50-day moving average, very negative, but some initial support here around the 0.8 pence level. Probably safest, though, to wait for a break back above the 50-day moving average at 0.98, that's the blue line there, before assuming that the stock here is able or has rehabilitated itself. On to a stock which has not been a great performer in the recent past, but looks as though it is starting to get back in business for the bulls. Rising trend channel that you can draw from October last year, the floor of the channel and the 200-day moving average around 0.34. And the message here really is that while we remain above, well above 0.3 pence, which is post-February support, there's a chance, maybe an outside chance, of a push towards 0.7 pence and the top of last year's trend channel. Obviously, if you're fussy or squeamish about the stock, maybe wait for a break or at least an end of day close back above the 50-day moving average at 0.38 pence before pressing the buy button. On to Cooves, which has been a reasonable recovery situation over the last month or 6 weeks. We had this vertical push through the 50-day moving average the middle of April with decent volume. Since then, the volumes have petered out a bit, but looks as though we've got rising trend channel from the beginning of March and floor of that channel around the 12 3/4 pence level. If we can hold around the 12 pence zone, which is initial May resistance, then the target here as high as 20 pence, colliding also with the 200-day moving average at 18.89 pence. Onto a stock which gets quite a lot of oxygen on Twitter on an almost daily basis, and probably argue that this is the best of the bunch, one of the best of the bunch as far as these stocks we're looking at today is concerned. Wide trend channel from February. I think we had the placing out of the way at the beginning of May, so that was the gap and then the recovery. What's positive about that is the way that even after that gap down, the shares remained above the 50-day moving average. And really, while we're above that blue line there at 6.18 pence, one would be reasonably confident that the 2 to 3 month target here, as high as 17 pence, could be hit at the top of last year's rather wide trend channel. Going on to another bullish situation, a Symphony, where we've got the pullback, rather sharp pullback from the early May peak. What's encouraging here is basically the way that we've got the shares pushing through a rising 50-day moving average. That's 24 1/4 pence. That's normally a decent signal. And really, while we're above this main support area at 20 pence, we would be looking for 35 pence plus to be tested over the course of June and July. Finishing off with an old favorite just in the sense that the charting has worked here basically since I think big early April when the shares were around 8 pence. So we had the big push higher towards the main resistance here, which is around 30 pence per turn. And current situation looks as though we've got a mid-move consolidation between 20, well, let's say 18 and 25 pence. Weekly close above 25 pence should be enough to give us a new target as high as 45 pence over the following couple of months. The main resistance, as for those that are not familiar with the shares, is around 30 pence from mid-2015. That's it from me. More updates early next week.